A very good morning to all our viewers. You have tuned in to Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts, and we will come to that shortly. But let's have a look at what the markets are up to. So Cheryl, the markets are clearly matching the color of your dress. But other than that, seems like a quiet day. Markets are in a Friday mode. What's your analysis?
Absolutely. A very good morning to you, Shrishti. The moment I actually picked this kind of color to wear, the markets were still holding on to some sort of a green, as to say. But if you look at the markets right now, we've given up those gains. We are trading negative with the negative bias. Let me say that, because it's not that big of a cut that we are seeing on the benchmark indices. You have Nifty Bank that's following the suit as well. No doubt, the advanced decline ratio right now is in the favor of the declines. Talking of the list of gainers, remember you had the IT stocks that were in focus on back of Accenture earnings. So you have Infosys, TCS, that they are the top gainers on the Nifty, followed by Apollo Hospitals, Cipla, as well as Wipro. But on the flip side, you have Adani Enterprises that's seeing a knock of about 3%. You have Hindalco, Bajaj Twins that are declining in trade, as well as Tata Steel that are under pressure. Talking about sectoral indices, let me see which are the ones that are gaining in trade today. And you only have the IT index that's holding on to gains, 7/10% uptick coming for Nifty IT index. Apart from Nifty IT index, all the sectoral indices are in the negative territory. So metal is the one that's seeing the most amount of decline, 1.8% downtick coming in for the metal index. You also have the PSU Bank Index that's under pressure in today's trading session. Also, you have the Midcap Index that are seeing sharper drops when you compare them to the benchmark indices. So you have the Midcap Index that is seeing declines of about 0.7%. But you know, the one of the stocks or the sector that is hit the most in today's trading session definitely has to be the AMC pack. Be it HDFC AMC, be it UTI AMC, Birla Sun Life, or for the matter of fact, take a look at what is happening to Nippon as well. All of them are seeing a sharp cut in today's trading session. Remember that there is amendment to the finance bill, and those amendments are the ones that are actually spooking the AMC market as well. And remember that the finance minister is yet to table that bill today. But as per the amendments, what are they? Why such a hit coming in on all of these counters? Let me take it across to my colleague Sharath to explain it better. Sharath?
Well, yes, this entire impact was actually coming in for the debt mutual fund schemes operated by the AMCs, and do remember the size is pretty big. Now the thing is, the index and benefits wouldn't be there, especially coming if you're holding it for more than 3 years. Now, of course, we did an impact analysis as well, and mostly this would be impacting the HNI players. Now, if you look at it, of course, the tax savings will actually come down going ahead. But then the question remains is what happens next? Where does the money flow out? And of course, we spoke with the experts on the ground, and they've stated that the money could be going to the fixed deposits, which is the banks. Apart from that, equity saving schemes, especially the hybrid product, that is where the inflows might be more. And also do remember there are corporate FDs and bonds which give you a range of return between 8 to 11 odd %. That would be in focus. And of course, buying more into physical gold or your sovereign gold bonds. Do remember this indexation benefit is also going away for gold and international funds and equity investing in that FOF funds. Apart from this, how big is the debt mutual fund industry if you compare it with the total AUM size? And we did check the AMFI data for the February, and over here the debt funds are having almost 13 lakh crore kind of contribution. If you see the total AUM, that comes in almost 41 lakh crore rupees, and the hybrid fund, that's almost 5.1 lakh crore of AUM. But what's the impact? That's the question. And rightly you mentioned that the AMC stocks have been seeing a selling pressure like HDFC AMC, ABSL, Nippon India, UTI AMC. But a kind of a positive move can be there for the banks as the deposits might increase, and that includes bigger bank names such as SDFC, ICICI Bank. And however, there is also a marginal negative impact also coming for the NBFC stocks. And this is because a lot of corporate funding is there, especially on the bonds and the NCD side, and that's why actually NBFC stocks have also started falling in the day's trade today. But the last question remains is, what's the pie? How's the investment looking like across the various asset classes when it comes to debt mutual funds? And we have taken the long-term view of it, and over here we see corporates are having the bulk of it, of almost 55% of exposure coming in this long-term debt funds, and after that the HNI is the numbers coming in at almost 39%. But for retail and other segments, it is still very negligible.
Bharat, for giving us all those details. So definitely a big setback coming in from the debt mutual fund industry, where no indexation benefits anymore as of now. But we will be following up more onto this particular news. But onto the show today, let's move on, and it's time to go to Kunal Bothra, because he's joining us live into the studios for Buy Now Sell Now Pachala today. So Kunal, what are we going to learn today?
So thank you, Srishti, for that. Over the last couple of weeks, in the previous two Pathshala days, we've discussed the trends on the Nifty and the Bank Nifty, that how the indices have been going into a bit of a sluggish towards a mild downtrend. Now, today I'm discussing on the Midcap 50 index, and how the Midcap 50 index is poised at a very, very crucial juncture on the long-term charts. So we look at the charts, for the Midcap index for the last 14 to 15 years, right from the time when the 2008, when the Midcap index was at a significantly lower level. So this is the point, and this is the trend line which matters quite significantly. On the long-term basis, in a span of almost a decade or so, the index has a propensity of going into a rally, coming back towards a major retest of the trend line, and then bouncing off quite smartly at the third instance of the major trend line support. And this was seen from 2009 towards 2020. We are at a very similar kind of a juncture so far from 2020 lows towards current juncture for Midcap index. So the low which we made in 2020 was approximately at 2,500-550 mark for the Midcap index. We made a low in 2022, which was just around that 7,200 odd mark for the Midcap index. This low, when we joined by a simple trend line, coincides with the current existing level for the Midcap index, which means we are at a very crucial juncture for the Midcap index on the long-term basis. And assumingly, if we don't break below this level, then there could be a higher possibility that the Midcap index can chart up a new course on the upside from a medium to long-term play. But in case if we go into a correction, there is a higher probability that the trend would be a bit more sluggish, like what we saw for the Nifty and Bank Nifty. So very interesting prospects for Midcap index, poised at a very strong support zone. If we manage to hold on at current levels, then probably we can expect a ferocious bounce to come by over the next 6 to 8 months. But in case if this support gets broken, then there could be a decisive downtrend in the making for the index.
All right, so that's where the range is set for Nifty Midcap Index. Last week we spoke about Nifty Bank. Previous to that, we did speak about Nifty. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of your stock-related queries, or rather, we'll start taking all of your stock-related queries. So don't go anywhere.
Welcome back to Buy Now Sell Now on ET Now, and this is the show where you get all your stock related queries answered by the experts. And viewers, do remember that you can connect with us on Twitter, as well as you can also connect with us and watch our live streaming on etnownews.com, as well as you can write to us with your stock related queries onto the WhatsApp number that will be flashing on your screen. Do tell us your name, your stock, the amount of holding, and your investment horizon, and that will help us get you better understanding and the expected analysis by our experts. But let's move on and kickstart taking all your stock related queries. And the first question that I have is coming from Hemant. And Kunal, he has bought 200 shares of ABFRL at a price of 274, currently at a loss of over 20%. What to do next? He can still hold this counter for the next 3 to 4 years, and any price that he can plan to average on, if that's advisable.
Well, yeah, I think I would suggest, first of all, that you can continue to hold on to the stock. It's going into it's gone into a downward trend, but I think at current levels of 212, it's now coming very close towards a zone where the stock would eventually get into an oversold territory, and the demand would probably overpower the supply. Now, that would probably stabilize the correction, at least over the near to medium term, for ABFRL. My sense is that level could be maybe closer to 200 mark for ABFRL, because generally those psychological levels act as strong support zones from a long-term time scale. And look at it this way, that from 350 levels, the stock, if it happens to come back just sub that 200 mark, it would have completed a major retracement in terms of percentage points as well. So I believe that you should look to hold on to the stock as of now. If you're looking to average, sub 200 or just mildly at the 200 levels is where I think you can look to average further.
Okay, this next query is coming in from PGK Raju, I believe. Yes. And he is actually asking about, He's asking about Union Bank of India. Kunal, 65 is the buy price for it. He wants to hold on for the next 1 year. He's saying he's expecting PSBs to get re-rated from here on. If that's so, does it make sense for him to stay put with the Union Bank? And also, just a second, also he's checking if he is, what sort of a target should he look at for this one?
So yeah, I think I'll second your opinion that I'm also extremely bullish on PSU bank stocks from a long-term play. Now look at this way that the rally which started off from 2022, second half for these PSU banking stocks, Union Bank for example moved up from 30 rupees to I think at one point just about in touching distance of crossing that 100 levels, and now it's corrected back towards 64, 65. So which means the stock which went to a 3x kind of a return has now corrected by almost 30% from the previous highs of 96, 98 approximately. So it indicates that the stock has completed a classic retracement. Structure looks very attractive. Volumes on the rise were significantly higher as compared to volumes on the sell-off or in the correction. I would suggest to hold on. If possible, you can look to even average further at current levels for a time period of at least 1 to 2 years, if not more.
Okay, now the next question is on IRCTC. Satyaveni is holding 100 shares at a price of 810, and since the past so many weeks now, the stock is trying to hold that 600 level. So should he average at this point in time, or more weaknesses can still come in for this counter?
I think 600 is a good level where you can look to average. So look at this way that twice in the last 1 year or 1.5 odd year, the stock has bounced off from that 600 levels. I think in the month of August 2022 is where the stock had come sub that 600 levels, and from there it bounced off to almost 750 or 775 approximately, which means that that 600 zone is a very strong support zone. And even the last I think 2-3 weeks the stock has been holding on to that 600 levels. So it's a good time if you're looking to average IRCTC sub that 600 levels.
Okay, this one is coming from Renuka Thomas. HDFC Bank or Infosys, which one is the better one for a period of 1 year, Kunal?
A tough one, but I think I would probably give HDFC Bank a slight edge over here because the banks are becoming as a favorite sector. These these stocks have corrected. HDFC Bank has been an underperformer in that regards. So it always makes sense to stick with large cap names in a potentially strong sector. The reason why I would probably skip IT from a 1 year time frame is because of the too many issues plaguing across the globe. Specifically the US markets, and I think that's one of the reasons why I would believe that Infosys may remain a bit more volatile. I'm bullish on Infosys from a long-term play, but if you are asking me for a choice between HDFC Bank and Infosys, I would prefer HDFC Bank.
Okay, Kunal, the next question is on Vedanta. Jay Krishnan from Kerala is holding shares of Vedanta at a price of 274 rupees. This particular count has been moving on the back of the news flow we just highlighted yesterday, why the stock was under pressure. Today also there are some reports, but what to do next? How the chart's looking like for this one?
Well, I would suggest to keep it just as a trading play. I'm not sure, that the stock has given any kind of a great returns over a longer term time scale. The worry with the charts for Vedanta is the very, very volatile nature of the stock price, where it goes into periods of correction which has been more than 40 to 50% in a short span of time. Now look at Feb or March 2022, the stock was almost at 425, and in just a matter of 2 months, the stock corrected more than 50% to come back, sub the 200 levels. Even recently, the stock, which was almost at 350 levels, has now come back towards 275. So this tendency of the stock to correct very sharply doesn't make it as a suitable long-term trading buy. I would keep it as a more trading play. So if you happen to get back to maybe say 285 to 90 levels, it's a good time to book out profits.
All right, that's the take coming in on Vedanta. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. Give Kunal a breather, but we'll be back taking all of your stock-related query after this break, so don't go anywhere.
Welcome back to Buy Now, Sell Now on ET Now, a show where you get all your stock-related queries answered by the experts. And onto the show, we have Kunal Bothra as well as Avinash Korakshikar is also with us. But since he's facing some issues with the Skype, so he's connected with us on the phone line. So we'll try to get the answers of your stock queries from them. And moving on to the next one, Kunal, let me come to you. The question is from A. Subramaniam, and he is holding 15 shares of Vardhaman Holdings at a price of 3,000 rupees. Is that a hold or sell? We don't discuss much about this company. So anything on the charts?
Well, no, I think the stock has been trading into a downward trend. I think if I'm not wrong, it's trading at 2550 levels, below the 200-day moving average, significantly below the average since I think May 2022. That's the first time when the stock had decisively broken below those levels. So, which means for the last 10, 11 months, the stock has been trading into a downward trend. I would suggest that you should look to exit. In fact, this is a very good time to try and invest your holdings from these kind of stocks towards large cap names, HDFC Bank, SBI, ICICI Bank, Reliance Industries. These are classical stocks which you can look to add at current juncture.
All right. This next one that I have is coming in from Samrat, and he has 400 shares of ITC that is purchased at 207 rupees per share. Kunal, should he book profit or continue to hold on to this one? I believe that ITC was among your top bets today. 400 is the target.
Absolutely. So I think a better level if you're looking to exit or book profits would be just about closer to 400. The stock has this tendency of coming back towards the previous resistance. So 394, if I'm not wrong, was the previous high for ITC. At least a retest of that previous highs could be done this time around as well. So if you're looking to book profits, just about the 394 or maybe around that 400 level could be a good zone to book profits.
Okay, Avinash, coming to you for the next one. The question is from Balin, and he's holding shares of NoSil from a price of 280 rupees. Currently at a loss. What to do next if that's an exit? So can you just tell or recommend him some of the mid cap or small cap names, some of your favorite picks right now?
Yeah, I think as far as NoSil is concerned, I think it's a great business. They are into rubber chemicals. And best part is, a large part of their expansion has come only from their internal accruals. They don't have any long-term or short-term debt on the books. So unless, he's got a short-term view, I would believe that he has to keep a time horizon of at least 12 to 18 months here. And if he wants to switch to another, stock where the risk reward is much better than NoSil, then I think he could look at a capital goods player called Action Construction Equipment, which has delivered very strong numbers in the December quarter, has a very large order book and operates in the in the mobile crane market and the defense market. So I think this could be a stock where he could obviously get a price of roughly about 450 over the next, say, 12 months. So I think in case he wants to make a shift, this capital goods player from the mid-cap space looks pretty interesting, both on the growth side as well as on the valuation side.
This one is for you, Kunal, because it's addressed to you, and this one is from Durai. He's writing to us from Chennai. He wants your advice on NCC, 1100 shares at an average price of 61 rupees per share. He is a long-term investor, but he wants to know what sort of target should he look at for NCC for a period of at least a year. He's sitting on a good profit on this one.
So I would recommend that maybe closer to 110, 12 levels is where you can look out to book the first tranche of profits for NCC. That's a zone which I've recommended as a target for the stock almost a week and a half out back when I recommended the stock sub the 100 levels. Now, I believe that it also makes sense that you try and do some sort of trading over here, maybe closer to 110, 12 levels. You can look to book out profits, and in case the stock corrects back towards 98 levels or 96 mark, that's a zone where you can look to buy back again. So I believe that the stock would probably trade into this 15%, 20% band for some time before it starts to get into a further uptrend for itself.
Okay, moving on to the next question, and Avinash, the question is from Dikshita, and she wants a fundamental view on Sun TV, and she's also looking to invest into sectors like TV broadcasting as well as software production industry. So any name that you can recommend from these particular sectors and the ones that are on your radar list?
I think as far as the media and entertainment space is concerned, I think first my view on Sun TV. I think Sun TV has delivered little softer numbers for the December quarter, largely because advertising market has slowed down, and because of the slowdown in the FMCG segment, advertising spends have not increased. So we could expect some weaker numbers at least for the next couple of quarters for Sun TV. So in case if the investor is holding on to Sun TV, I think at least keeping a 12 to 15 month time frame is very much essential. The company is fundamentally very sound, has a large cash kitty, but the most important thing is growth has now suffered in the last couple of quarters, and growth could be muted at least up to June, July. So till that time, I think it could remain in a small range. And as far as media and entertainment stocks are concerned, I would believe that if she has a long-term view, she could look at Zee Entertainment, which is now going to become a Sony Group company. Although the merger formalities are not yet completed, I believe that it offers a lot of value if the investor has got a 2-year kind of time frame. So I think Zee Entertainment at these levels looks pretty attractive, provided the investor has a slightly medium-term time frame.
Right, Kunal, this one is from Swati and she's asking if it will be profitable to buy HAL in the OFS today and what sort of a short-term target should she look at for this one?
So HL has been one of the stocks which you've been recommending a buy, I think almost on a regular basis. Purely on charts, if I have to bring in a level, then I think 2,400 is a zone where the stock would be a very good or an attractive buy. That's a zone where the stock would probably coincide with the 200 moving average as well. So a classic mean reversion could get completed. So a classical level to buy would be around this 2,400 mark. Not sure whether you what's the the gains in terms of the OFS, but I think in terms of technical levels, 2,400 could be a zone where you could look to buy.
Okay, Avinash, coming to you for the next one. The question is from Bishakha and she is holding 20 shares of Tejas Network from a price of 405 as well as 100 shares of Hintcon from levels of 60. What to do in both of these counters? Is this a good time to book profits?
No, I think as far as Tejas Network is concerned, I would believe that the investor can hold on, considering the fact that the company has a very large order book for most of the 5G equipment which is going to require for the 5G rollout. And I think as and how expansion kicks in, you're going to see a lot of traction in this company. Already, Tata's have taken a 25% stake in this company, and there are market reports suggesting that possibly this could in future become a fully owned Tata Group company. So my sense is Tejas Network, the investor has entered at a decent level. I think definitely one should look at the next 12 to 15 months and hold on. A further risk-reward opportunity is awaiting here. And for Hintcon, I would believe that, I think clearly the price at which the stock has been purchased has been slightly elevated. So I think here, unless the investor has a very long-term view of at least 2 years plus, I don't think in the short term there are any major triggers by which the stock could be re-rated. So Tejas Network can be held on, and definitely one can expect a further risk reward here.
Right, this one is coming in from Shiva Prasad from Udupi. Kunal, this one is for you. He's holding Avanti Feeds around 500 shares at a price of 425 rupees per share. He wants to know whether he should stay put with this one or look to exit.
I think you should look to exit. The stock has been trending down, broken below the 200 DMA 5-6 months back when the stock was almost at 475, currently at 333, which means the stock seems to be into a very swift, sharp downtrend. So would suggest an exit.
Okay, Kunal, the next question is from Venkat Rao and he's looking for fresh investments into Hindustan Oil Exploration. What would you recommend? The stock is still trying to hold that 120 odd levels.
Well, it's a high beta name, closer to 125, still below the 200 DMAs and most of the other major parameters in terms of averages. The concern for Hindustan Oil Exploration is that the indicators on the weekly and the monthly charts are now getting into a slight bearish territory. So that would probably indicate that the stock may remain under some sort of pressure for the immediate future. So I think it doesn't make sense to put in extra capital or buy the stock or continue to average. I would suggest that you should avoid this name as of now. In case if you're already holding, then maybe closer to 145, 150, where the stock may get into any kind of a bounce, should be a good level where you can look to exit.
Okay, another one coming your way. Kunal, Amit Murkute from Mumbai wants to know about Bodal Chemicals, 1,000 shares at a price of 70 rupees per share. He is actually facing some sort of loss on this one. Should he continue to hold on for the next 3 months or look to exit?
Very sharp downtrend so far. I think if I'm not wrong, this is the 4th, 7th or 8th consecutive month of sharp selling for Bodal Chemicals from 100 levels to 59, 60 levels as of now. The concern again is that the indicators are not oversold on the weekly and monthly charts. So even though the stock has been correcting consecutively for the last 8-9 months, there may be a relief rally in play for the stock price. But the worry is that the indicators are not oversold, and that could probably lead to selling on any kind of a major rally. So I would suggest that you should look to exit the stock. Maybe wait out for a bounce of another maybe 4-5%, 64, 65 could be a better zone where you may look to exit.
Okay, Avinash, Hamsa is holding 760 shares of Nalco from an average price of 81 rupees. She is looking to add more and she can hold this counter for the next 5 to 10 years. Your advice?
No, I think, this is a commodity play. The company makes alumina and aluminum. And I think for commodity players, taking a 5 or 10-year view is really not, realistic. So I would suggest if the investor can hold on for the next 12 to 18 months, I think she can accumulate at the current levels. My sense is that aluminum prices still continue to remain firm, and Nalco is a debt-free company, gives a reasonably good dividend yield also to its investors. So I believe that 12 to 18 months one could look at targets of around 120, 125. So I think keep a near-term view, and then one can review the position accordingly.
From Srinivas, he's writing to us from Vijayawada. Avinash, she's asking about Devyani International, 300 shares at a price of 190 rupees per share. Makes sense to continue to stay put with this one or look to exit, or do you suggest that he goes ahead and averages it out because it is below his buying price?
No, I think longer term, the QSR market, Cheryl, is going to do extremely well. And I think Devyani International runs the KFC and the Pizza Hut franchisee in India. My sense is that the investor should average out at the current odd levels. The stock appears to be quite attractive from a 12 to 18 month horizon. And recently, Franklin Templeton has acquired shares from the open market in a recent bulk deal. So I think institutional interest has also started coming back. So hopefully, if the investor can hold on for the next 1.5 to 2 years, I think the risk reward should be good. So I think definitely, if possible, the investor should average and take a long-term view here.
Okay, Avinash, once again coming to you for the next one. Rajesh Maheshwari is holding 60 shares of Anupam Rasayan from a price of 700. Seeing a good move for the past 3-4 days. Does it make sense to book profits or hold on for the medium term, and how our outlook and the prospects looking like to you?
No, I think looking at the kind of uptrend in the last 3 to 4 days, and plus encouraging news flows coming in from the company on new order wins, I would believe that if the investor has a 6 to 12 month horizon, then I think the company is into specialty chemicals, has been doing pretty well. So I think another 6 to 12 months, if the investor can hold on and patiently wait, then I think he could expect a further decent risk reward here. At that point, possibly he could book out. But I think clearly, in this uptrend, when the stock is now going up, he should not take the haste of selling out too soon. So I think better to hold for some more time.
All right, the next one is coming from Vivek, and he's addressed this to you, Kunal, though he wants to know if the stock is good fundamentally, but still I'll ask you this question on Century Ply. 465 is a buy price. He wants to know whether he should again buy at a fresh for a period of 1 to 2 years. I believe he's not bought the counter, he's just stating the current market price for this one.
Well, again, a stock which has been trading down, trending down. The weekly supports of, I think, 500, 520 have also been broken for Century Ply, which means that there is a possibility that the stock may get into a swifter kind of a downtrend. I think you should look to buy the stock in case if you are looking at it from a long-term play, only about the 500, 520 mark, because that would probably reinstate the fact that the stock has come back towards a major support zone at the weekly as well as on the monthly chart. So not at current levels, but in case if the stock bounces off from those current levels of 520, 500 levels, then it makes sense to buy the stock.
Okay, Avinash, coming to you for the next one. The question is from Amla D'Souza, and she's holding shares of Edelweiss Financial Services from a price of 107, currently at a huge loss. So what's your outlook on this particular counter? Good time to average, exit, or hold on?
No, I think my sense is that, the stock has been purchased at a pretty high level, and I think at least growth numbers going forward are not going to be very encouraging. So I would suggest that, if the investor can switch over to some private sector bank or a PSU bank, I think Federal Bank looks pretty interesting at the current odd levels, and I think probably can give a very good risk reward. The other private sector bank is IDFC First. If the investor can shift the entire quantity what she has purchased in Edelweiss Financial in even IDFC First, you could look at a target price of at least 75 to 80. So I would believe that, rather than looking at large gains coming in from Edelweiss, which look very unlikely, I think these two stocks can give you a decent risk reward over the next, say, 12 to 15 months.
All right, this one is coming in from Srividya, and this one is for you, Kunal. 600 shares of Bajaj Finserv at a price of 1,570, 500 shares of Bajaj Finance at a price of 6,900 rupees per share. Because of this downturn, she's a bit jittery about the stock because she's saying, though it's a fundamentally strong stock, but it is looking at their current price fluctuation, she's afraid whether she should continue to hold on to it, or now should she average or look to exit these counters altogether.
I think you should look to hold on. Good prices, good news, they don't come together. And I think for Bajaj Finance and Finserv, it's the zone where the news flow, of course, is not that great. but the prices have come back towards a very attractive territory. Now there could be a point where these stocks may remain into a sluggish trend, a time-wise correction, but then from a long-term investor, these are good value buys territories for the stock price. So I would suggest a hold.
Okay, the next question is from PGK Raju, and he says he's currently in USA on Vista's visa, but he's like concerned about his investment. So let's move on to his question. And he's holding 10,000 shares of Union Bank, bought at a price of 65 rupees. Avinash, what's your advice on this particular counter? He can still hold on for the next 1 year.
I think he should hold on for the next 12 to 15 months here. Union Bank has delivered very strong numbers, a very good asset quality kind of number. And I think my sense is that even the March quarter should be reasonably strong. And obviously FY24 should be a lot better. So I think he's bought it at 65. I would suggest that if he can hold on for the next, say, 12 to 15 months, he could expect at least a reasonable target of around 85 to 90. So I think definitely one should not book out in a loss. Please hold on for at least next 6 to 12 months, and I think you should reasonably get a good exit price, provided you have the time frame to hold on.
This was coming from Krishna Mohan. Subex is a counter. Kunal bought at levels of 40 rupees per share for the short term. What should he do?
Well, I think you should have to exit. I think the stock has been trading into a trend which has been very, very volatile. I would suggest an exit on the stock at current levels. And again, as I said earlier, that it makes sense to shift towards solid large cap names, some of the names which we discussed earlier. So I think it makes sense to make that switch currently.
Okay, Avinash, the question is from Abhijit, and he's holding 500 shares of Wipro from a price of 484. Is this a good time to average out this counter? His investment horizon is for the next 12 to 18 months.
Yeah, I think looking at the time horizon, he can definitely average out, but I think the time horizon should be slightly longer term, minimum 12 to 18 months, because only then, the investor can expect a decent risk reward.
So take coming in on Wipro, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back, and we'll be taking more of your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. We've reached the last leg of the show. Let's continue taking all of your stock-related queries as quick as possible. This one is coming from Mahanand Mahashi. Kunal, 10 shares of Tata Elxsi purchased at 1900 rupees per share. He wants to know what's the future for the next 6 months for this particular counter. What should he do?
Well, if you ask me, I am pretty negative on Tata Elxsi since the last, I think, 6 or 8 months, when the stock had broken below that 8,800 levels, which was a major support. I think at current levels, I would still expect the stock to get into a downward trend further. So possibly in the next 6 months, the stock can correct by at least another 10 to 15% from current levels.
Okay, Avinash, the next question is from Aditya, and he's holding shares of Rain Industries at a price of 173 at a loss of 10%, but he can still hold it for the next 1 to 3 years. Is that an average hold or exit?
I think he can hold on. See, Rain Industries is one of the large player of calcined petroleum coke, and globally it's one of the large companies which caters to the aluminum sector both in India as well as globally. My sense is if the investor can hold on for the next 12 to 15 months, he should not exit in a loss. The company has shown a decent performance in the third quarter, and hopefully once aluminum prices start moving up and China re-enters the metal market, I think he could expect a decent risk reward here. So I think keep a time frame of at least 12 to 18 months and continue to hold on to Rain Industries as of now.
All right. With that, let me just actually slip in a question, Kunal. What should actually retail investors do right now in order to keep their wealth protected, given the way how the markets are trading pretty volatile?
So, Cheryl, I think since the markets are volatile, there is a lot of, introspection which a retail investor needs to do in terms of the portfolio. You have to ensure that you reduce the leverage in terms of your individual portfolios, because these are the times where money making becomes a lot more difficult, and I think these are times where you should try and reduce the trading, reduce the leverage on your portfolio, because that will help you substantially reduce the drawdowns, reduce the losses in your portfolios significantly. The second and the most important part is, in these kind of volatile markets is where we typically tell clients as well as individual investors to try and increase the cash in their portfolios, because you always get good opportunities, good bargains in these kind of markets. So if large cap names get into a very sharp correction, if large cap stocks they correct by 20-30%, they become very strong bargains from long term play. So you have to ensure that you increase your cash portfolio, cash component in your portfolio. And the third, the most important portion is that you have to select large cap stocks in volatile times. Even though the mid cap names, the small cap stocks, they may look very attractive, they may be at a very attractive zone, they may probably get into a good risk reward play, but it always makes sense to get into large caps first. Maybe 70% of your portfolio should be protected towards large cap stocks, and the balance could be distributed between mid caps and small caps in this kind of a volatile market.
Okay, so that's the advice for the retail investors. But once again, taking your queries now. And Avinash, Hema Chandra is holding shares of L&T Finance from a price of 84 rupees. How are the future prospects looking like for this one?
L&T Finance is a company where the parentage is Larsen and Toubro, and I think looking at the kind of tailwinds in the infrastructure kind of segment, especially post the union budget, the government has announced a large 10 lakh crore kind of outlay for infrastructure. My sense is that definitely a company like L&T Finance would benefit. They've also moved into tractor financing, commercial vehicle financing. So I think one needs to take a slightly longer term view of at least say 12 to 18 months. But definitely I think one should hold on. The stock has been a slow mover, but if one takes a longer term view, I think a lot of value can get reflected here. So continue to hold on.
Kunal, this one's from Sanjay Jha. He's from Patna. He's purchased BEL at a price of 105 rupees per share. Should he average or exit?
Average at current levels of 1992.
Okay, Avinash, we know from Chennai is a long-term investor and wants to know the best one amongst Craftsman Automation as well as Power Mech. Any advice on this?
No, I think Power Mech definitely seems to be a well-positioned kind of bet in the current scenario. It represents the capital goods sector has a very large order book, and in fact the third quarter numbers have been very solid. So my sense is that not only the March quarter, but even FY24 should be a lot better, considering that the order book will give a good amount of revenue visibility for the company. So Power Mech seems to be a much better bet, but time frame should be at least 12 to 15 months. I think the whole execution story could get reflected by next year, and hopefully with an election year, I think you could expect a lot of EPC work, and plus the company does a lot of O&M kind of work, which also adds to the cash flow and to the company's profitability. So I would believe Power Mech is a good choice in the current scenario.
All right, that's the take coming in on Power Mech, and with that, we are totally out of time on this edition of Buy Now Sell Now. Thank you so much, Kunal, as well as Avinash for joining us on the show and taking our viewers through all the queries. And viewers, it's a wrap on this week's edition of Buy Now Sell Now. So goodbye from Srishti, my producer Abhishek, my producer Santosh, as well as Ravinder, my camera team, and all of the entire team of ET Now. Thank you so much for watching, and also have a great weekend.